Hello guys, have you ever wondered what strategy to use while trading crypto? Yeah, I know you must have imagined that. I'm Chumbo Augustine and today I'm going to be taking you through two major strategies that people use while trading crypto. But before that, it is worthy of note to know that Bitcoin, Ethereum, Solana, cryptocurrency, crypto economy, it's going through its first war. Its first war because crypto hasn't had a war since its inception and it has affected the crypto economy, it has affected the crypto space, and it's very, very comfortable to say this because of the Russia and Ukraine invasion, rather the Russian invasion on Ukraine, and this has affected the crypto world. And the benchmark setter for all cryptos, Bitcoin, was sitting at about 32,000 last 2 weeks, and now it's comfortably in a 43,000 space. So it is recovering from the effects of the war, and it's a good thing. So back to our strategy. Traders seek to find the best strategy to trade because live trading, normal trading, involves emotion. Sometimes your emotion gets you involved, which I don't advise you get your emotion involved in your trading activities, but certainly we're all human. It gets involved most time because we're talking about money. We're talking about our hard-earned currency. So that is why most traders have sought out basically means and strategy they're going to trade safely and comfortably. But like I said, it is basic, it is not a financial advice. It is left for you to actually decide which strategy to go into after I tell you what I know, because I'm just a guy sitting in the space saying what he knows. So the first is the DCA, the almighty dollar cost averaging, and the other one is buying in lump sum. I'm going to start with buying in lump sum. Now, buying in lump sum is basically getting your money, all your money, or whatever you want to invest into the market, into the particular crypto you want to buy in, and at a particular time you want to buy in. But I'll have to ship this in that like I said in my previous video, it is always very, very important and worthy of note not to buy crypto at its peak. Always buy crypto when it's at the dip, when it's going down, when everybody's complaining, when everybody's wailing that their crypto value is down. That is the actual time for you to buy, for those that might probably be thinking of the buying in lump strategy. So here you get your money, you accumulate it regardless of how much you have, whatever you want to go in with, and at a particular time you think is fit, you go into the market and then you sit back and wait for your profits. But like you know, every strategy has its pros and cons. Now, if you buy at a very, very high price when the cryptocurrency market is high, or maybe when Bitcoin is high, let's take Bitcoin for instance, you bought a Bitcoin when it's at 60,000 for instance, you bought with like $20,000. And then all of a sudden Bitcoin crashes like $30,000. You can imagine how much you're losing. Now, but if you had gotten the crypto, if you had gotten the Bitcoin when it's $30,000, if it eventually goes up to $50,000, you can imagine how much you'll be making at that point. Now, that is basically the pros and cons of using the buying in lump sum strategy. Our second strategy is the dollar cost averaging. For me, the dollar cost averaging is the smartest strategy for you to apply while trading crypto. Now, it goes this way. You get a fixed amount every month, every week, every day, whatever routine you want to make it. You deposit it, or rather, you invest it in crypto at intervals, weekly, monthly, and 2 months, depending on what you can do or what you want to do. Now, and when you're doing that, you're going to be doing that regardless of the price of the crypto, regardless of the trend, regardless of where it is currently, if it's going down, if it's going up. It takes away the emotion because you already made up your mind that you're putting a particular money there. And this is one good part of the DCA. It takes away emotions. It takes away the fear of I'm gonna lose my money, or the fear of when should I buy, or the fear if I buy now, am I not gonna be making a mistake? It takes away all that fear away from you. So if you're buying the DCA, you can decide to buy with 1,000 fixed at the end of the month when it's 30k, and then all of a sudden it drops down to like 29k. You can decide to buy, and we all know that when you buy when crypto is down, you buy more of that commodity, more of that cryptocurrency when it's down. So even if you're buying when it's higher, you already bought when it's low, and at the point it's definitely going to go down as well because you're on a fixed schedule of buying. You buy on both ends, you see, and when you're buying on both ends, it reduces your loss. it reduces your loss at the point where it drops. Because if it's dropping, you probably must have gotten, like, you must have gotten crypto maybe a few thousands before it drops, so that will make up for whatever it is you're supposed to be losing. So it reduces the loss. That is why I say it's one of the best strategies for me. So these are basically two of the major strategies that traders always use while trading crypto, regardless of the fact if they're using the technical analysis or if they're using the fundamental analysis, going through the charts and going through news and all that. They're still definitely going to decide when to buy in. So this buying and selling always falls within these two strategies. But like I said, it is not a financial advice. I'm just a guy sitting in a space telling you what he knows and what he feels if it's applicable. But if you find this video useful, please do well to click the subscribe button and the like button, because YouTube is going to like it a lot if you do that for me. Thank you very much.